righty. Doc here from North America. Good morning, good afternoon, and good evening. It is Tuesday, 7:30 a.m. here, 9:30 a.m. in Tokyo, and then wherever else anybody is, it is not or is that. All right, let's check it out and see what's going on here. Let's move it over to, let's take a look at, let's see where we got. You can see J4X a little red there. The dollar index has dropped back underneath the 105. There is, the constant talk of more interest rates. About interest rates going up higher and higher and higher, that type of thing. They don't seem to let it go. Let's put it that way. I myself, I figure that sooner or later, the markets as usual will tell us what's going on. Hey, George. Hey, Robin. In this case here, we've been in, I think, let's just take a look at what governs the currencies has been, obviously, and always is on some level, interest rates and inflation, the fundamentals. Now, they don't work like they used to because we have, the all-father-knowing central banks. They've decided to run the world financially, and they're doing whatever they're doing. Let's put it that way. We have this inflation and so forth. They couldn't recognize inflation for over a year and a half. Finally, they realized that it wasn't fleeting, as they would say, or transitory. That's it, transitory. And we are still hovering in the 6% area in inflation, where we got up close to 10 at one point. So in the end result is that most of the influence on currencies and equities and bonds is interest rates itself. What are the interest rates? And the bonds traders themselves seem to set that more than anything else at this point. And we've been saying for the last few weeks now, we're over that 5% area, and the market doesn't expect 5%. And so that has put more pressure on the currencies. And we saw let's put the, over on here on Chicago, where is it at? Right there. Let's put up the dollar index itself also, just like we have on J4X, right there. And so you can see here that the product is, up in this area here, it's been pushing up for days, and it looks like it's trying to flatten out here today. You can see on J4X on the daily, it is turning red, just as we have over here on Chicago. The green line has turned down the last couple of days and is trying to head south. Now we see the fast-moving algo on the weekly trying to roll over also at the same time, but they're both over the manifold, so they're not that fast at dropping. And then when we go over into the 30-year, the U.S. bonds themselves, you can see they're obviously at a low, which means that we're at an interest rate high. So in other words, the price of the bond tells you the opposite direction of the interest rate. So when bonds are going down in price, interest rates are rising. So interest rates have been rising since here back in the first day of February there. You can see we've been in that weekly sell for a bunch of weeks. And when we go over to J4X, you can see the same thing. You'll see lots of red. Red, red, red. Right there. All right. Why are we not seeing red? Oh, I know it is. It's what is this? This is the weekly. What? Yeah, I must have the wrong. Oh, that's a dollar index. That's what it is. And so the bonds are going down, right? And so the interest rates are rising. And what's that do? It presses the dollar up and away. And that's why we see green, 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 not red, red, red. And it's because the interest rates have been rising. They buy dollars. The number one product on the planet that gets bought is dollars. They buy dollars because they know that they can. Hey, Metho, how you doing? They know they can get in and out of it, and so that's the reason why. So when you're trying to move $1 billion or $3 billion or $5 billion, you can move it relatively simple. $20 billion, you can move that relatively easy because of the liquidity. Whereas in other currencies, you don't have that liquidity. As much as some countries want to be the world reserve currency. They don't really have a currency that has the ability to be that. But that's for another day. I say it so many times here, and people get a little confused. But we do have a euro, which is very close to having the same ability, and that's nice. And it's the second largest economy in the world. The European, the ECB, the European Central Bank, and the European Union is the second largest economy in the world, and so they have a floating currency. Right? Let's see, where's it at? Right here, as you can see. And it has been dropping because interest rates in the States have been rising. And you can see here this little pop. They found a way to get it into the buy at the very end of the day there yesterday. What you call Asian hours, I guess you could say. And you can see it's starting to lift a little bit in here. The weekly is in that sell. It's been pressing down for weeks now since that topping out right here. And this is the only other currency in the world that can handle anything like the American dollar. And that's why it's a very active and the second most actively traded currency in the world. And then, it drops off. The third most actively traded currency in the world is the Japanese yen. And then the fourth is the British pound. And then it's the Canadian dollar. Commonwealth again, two Commonwealths. Cable and Canadian, and then the Swiss franc and the kroner. So they are the top actively traded currencies in the world because they're liquid enough. And after that, everybody else kind of dies off. Sometimes the Australian dollar has a little more punch to it. In other words, it has some good liquidity to it. Same thing with some of the others, but they are free-floating currencies where the marketplace gets a chance to participate. All right, and from there, we're going to zip over to the same thing on J4X. We'll put the euro up there, and you can see it right there, matching up to the action we see in the weekly. So it'll be a lot of red here, red right there. Now, it's below the zero line. On a daily, you're going to see the same thing. It's been sliding and sliding and sliding, and it's starting to perk its head up, getting into a green today. Just like we are in a green today also. And we're on our second green now. So, all right. Anybody want to see anything? George, you want to see anything particular fresh? We can put something fresh up there for you if you'd like to see. Something that's not from a chart that you might have gotten. Or you, Metho, would you like to see anything particular? And so that's that is my rift of this morning, basically. That's my opinion and how we see the marketplace. And if not, we'll slide over to cable. Oh, George says metals keep falling. That's the interest rates rising. So, and George, have you noticed how the back months are on like gold? Gold in particular. Gold is trading $100 higher 1 year out, and it's trading almost $200 higher 2 years out. So it's a combination of delivery and interest rates. And I would say that obviously, since the interest rates are basically the same, you have to do the reduction mathematic thing and figure that what's really putting pressure on gold is delivery. They're not. The delivery system is saying keep it low. Yeah, here, let me show you. Let me go over to the metals complex and show you this. Let me bring it up to you. That was that. Let's put gold in. Here's gold. There is April gold of this year, trading at 18.15 as we speak. Then we slide over and take a look at gold. I see. And then we go and look at it right here. We're going to throw it up on the screen for you, and you'll be able to see the back months. And it'll be like, wow, far out. As it loads, it's loading up. As it loads up, come on, you can load up. There we go. And there's the gold. And here it comes to you. And there is April right there. We're going to highlight it even like that. There's April today. And then here's April of 2024. Right there. Trading at 19.27. Basically $113 higher at 19. Then we slide down into the 25. And they don't have an April contract yet because it's part of the old December-June rhythm. But you can see the December contract trading at right there a year later at 2025. So it's literally $200 over. And when you slide out into 26, you've got basically the same thing going on. It's threatening the $2,100 area, as you can see right there. There is that is 27, and there's a June of 28. It starts to smooth out, not the hundreds at that point. 21.38. So that is that's definitely something to think about. It tells us obviously the interest rates themselves are not what's really pushing the metals around. It's obviously the central banks. It's the delivery system. So they let the back months trade higher, because no one can exercise it. So that's the it's like it's a classical way of you try. Now when we look at silver, they're not as sharing. In other words, it's only like a dollar difference, $1.50, $2 difference. It's not $100 difference, or in this case you would think. I guess it probably fits the ratio on some level. Whatever the ratio is at the moment of silver versus gold per ounce. And but back silver is nowhere near as explosive in price as the gold is. Timothy, as I sip my tea and I'm ready for you. I'm ready for you. Here I come. Ta-da! Right there. Is that it? There it is, right there. Go like that. Shrink that one down. And move that one. Oh, let's disconnect it. Over. There we go. Let's see. That shows up pretty good, doesn't it? I think it does. There we are. And then we put this up over here like that. And then you can see, matter of fact, that we should pull that down and up. Like that, and like that. You see we went into the buy right here. Popped up a little bit there. I'll give you a full view of it right there. There was that first buy this morning. I noticed that the Asian hours, they were selling the markets down. And they were selling, like the stock indices down. And I am in a sell currently on cable. Okay. On the 15-minute? Yeah, well, look, look at that. You're right. It's underneath now for the last 30 minutes. Actually, it's trying to go back into the buy right here. Look at that. What do we got? We got a minute? No, we got seconds. Here it goes. There we go. Yeah, so we're back into the buy again. Right there. Let's jump back into the buy on this one. Yeah, we were in a sell also for a half hour. I see that. Interesting. All right. We're going to shrink that down and leave it on the screen for you throughout the webinar there. So you can at least see it moving around. Now, let's jump over to... Oh, I'll make a copy of this too. So when we go copy... what are we doing? Let's see, file. Let me do this. Let's put it back for a second like that, and then go file, copy. And this way we can paste it onto every one of these. And then like that. Now we go back to the currencies themselves. Like so. Right there. And you can see your GBP 13 minutes there. So yes, good morning, good afternoon, Timothy. All right, now from there we go over and look at the cable, and we just saw the intraday cable right there with Timothy's the chart that we've been following for Timothy, and then we have where is it at? Right there is the daily. It also closed in a daily buy yesterday. Let's widen that out so you can see it. I know I put a line in there last night. I said, I'm saving this thing. I'm going to put the line in there. Put the line in there, and where is it now? All gone. Okay, and then we'll go File, Save again. Right there. So, it's firming up. Now, interest rates in the States, as you can see on J4X, the dollar index is trying to roll over a little bit. And, when we look at the 5-year, or I guess we go over to here, you look at this is the gold. Let's take a look at, there's the 30-year. You can see 30 years down at its lows. Let's see what the 5-year looks like. It's probably identical in the sense that the 5-year is really pushing up, threatening the, there it is right there. It's a little bit higher. It's trying to dig in a little bit and bottom out. And that's the interpretation that the Fed is getting close to the end of, what do you call it? Trying to think of the raising of rates. That's pretty much what it comes down to. It seems like we are coming down to the end of it at this point, which is a good thing, and because the indicators that the Federal Reserve and the central banks use are lagging indicators, so they're not, they're like 3 and 6 months behind, and so they may have gotten a lot what they wanted done. I think we have data coming out at 8:30 today, and I think it's producer prices, or it's one of these that they're paying attention to again. And then it's the end of the month, and then on Friday we have labor numbers. So they've been selling the products down, but at the same time, they seem to be trying to bite in. In other words, they're trying to find a bottom in there. All right, and then from there we go over to Swiss. Let's see what the Swiss is up to this morning. And there's the Swiss right there. Still marching up. A little surprised. They sold it down a little bit yesterday, and now they're trying to perk it back up again. We're in that weekly buy for a few weeks. Where are you? There's the Swiss right there. And you see it's just been pressing up. A lot of green there. This is interesting. The fast stochastic is breaking down. And you can see here we have our algo breaking down. So, but the weekly itself doesn't seem to be that concerned. Pretty high off the manifold on the upside. Both the fast and the slow algorithms themselves are very firm. So that, as we used to say in the hedge fund industry, it may be next week's business, not this week's business, not today's business, maybe next week. All right, and then from there we go over to the yen. They seem to march together in a lockstep, and you can see that same strength going on there. In other words, it's losing against the dollar, whereas obviously we see the euro and the cable gaining against the dollar, which is interesting in its own right. And then we have, what do we have? Let's go put it up here. Right there. There's the yen. And you can see again, just slow, steady climb in a daily buy for 3 weeks now, plus almost 4 weeks. And you can see the weekly buy has been in a weekly buy. The slow has been in a weekly buy for 3 full weeks. And the fast has been in a buy from this point right here and never fell back into the sell because the dotted line is still above, the zero line here. So the pressure has been on the upside, and it doesn't seem to be stopping. And as much as we thought we would see this run up into the 36s, ever since we've watched it climb into the weekly buy and daily buy, kind of thought that maybe this would be the area they would stall out. So I guess we'll watch and see that. Now, I heard this one story out of Tokyo that the Bank of Japan is getting to the end of its bond buying for the quarter or for the year or something like that. So probably for the quarter. They announce what they're doing, and so they've been consuming bonds, buying them up for their portfolio. So that is probably part of it right there. They're expecting to see rates get forced a little bit higher. I'm now long at volatility index of the volatility index. Okay, let's take a look at the volatility index. I think it's right here. Right there. Now volatility is in a daily sell for the last 4 days. And we went into the sell here. It hasn't really done much. We climbed almost into the weekly buy. We're definitely very firm in here for this whole move here. You can see this. The dotted line jumped in towards the end of it, and the green line is still minus. You can see it there, minus 62. But the pressure is on the upside, and we were in a daily buy from here. I don't know why the line's not in there. Let's put that line back in there again. And let's put that sell line in there too. I see it's missing right there. And then let's put the new sell line in there, like that. There we are. I'm not I like metals, like the metals complex. I find that the VIX doesn't work like it used to because, again, QE, really stifles. I guess that's a good word. Stifle. It stalls. It chokes. I don't know. I can use all kinds of words. It holds back, the open market to reflect. So in other words, at this point in time, they're European options. They're not American options. American options you can exercise it any day. Again, it's a delivery thing. And European options are only exercisable at the expiration itself. And so that's what the problem is also, is that they put this index together with European options. They knew that they would never be successful if they had to do American options because too many exercises would go on. And which to me is a free market, but to them, they don't want a free market. So, let's see. I'm now long in volatility, right? It's something in the air. No, I hear you. Yeah. I saw where these ODTE options, I see them buying the heck out of them. You just don't know what they did on the other side. You don't know if they're hedging their portfolio for the end of the month, and so they're willing to sacrifice 30 or 40,000 or 50,000 or 2 or 3 million when you're hedging $2 billion. You're hedging $2 billion. What is it if you lose 30 million? That's nothing. It's nothing at all. Because it's the dividends pouring in on $2 billion could be well beyond that when you really think about it at 3% dividends on $2 billion at that's what I think the yield is about 3% on the dividend in general. In other words, the S&P 500. So on $1 billion. On $1 million, that 3% is, $30,000, right? That's 3% on $1 million, and so, then, you multiply that by 1,000, 30,000, and so you're looking at like $3 million is nothing. It means nothing at all They can buy $3 or $5 million worth of expiring options, and they're making $60 million a year just from dividends, and they can afford to throw $3 million of it out just to try to hedge the portfolio. We don't even know if they're short somewhere else along the line, if they're buying calls or they're buying. In this case, it's probably you saw something about them buying puts. You have no idea that how much they're long. So in other words, if the product goes up today, the $3 million lost is made in the equity sheet on the other side of it, because of the long position. So, I've seen that throughout the years about the, and there was a time where options were even more accurate, because less people were watching them. Now we've gotten to the point where the liquidity is there that even when they reach in and buy, like I heard yesterday they bought 30,000 calls on Tesla, and there was something crazy like the 225s. And I think let me see if I can throw this Tesla up on the screen here for you. Tesla is like trading at there was a couple of not rumors, but stories going around about stuff like that. So right there we go. And here's Tesla. Tesla was at 207 when they did it. And where's she at now? There's Tesla. Yeah, so Tesla is trading right as we speak at 211.73. Yesterday it settled at where did they settle at yesterday? They settled at 207.63. The day before that, when they stepped up and bought yesterday morning off the opening, the stock was at 202, 203, and it got as high as 209 and change. Now this morning they're up in the 211s, almost 212. There you can see it now, trading at 11.78 now. It's moved up 6 cents since we just put it up on the screen. Now it's only up 1 cent. It's active. So someone stepped up and bought, I think they bought 2-day options or 3-day options. Something like that. They stepped up for 3 days, paid 42 cents, $42 per option, 30,000 times. So, yeah, I'm always leery reading one side of the story. I love to find out what action has also occurred on the equity side, or you never know what could be a surrogate. You know that a lot of corporate bonds have a call option on stock. So in other words, when you buy a corporate bond on IBM or even possibly Tesla, it also has a call option that you can exercise stock out of it. And so what happens is that someone might have stepped up and bought some Tesla bonds, and next thing you know, they have all these calls. So they sell the stock short. Then they've been riding the bonds because they're collecting interest from them, and they shorted the call in a sense inside that, and then they realize, oh, wait a minute, there's a chance the stock might be moving up. Let's go buy 3-day options, spend $3 million, but they may have $100 million worth of corporate bonds of Tesla. So you never really know what side is being hedged, and it's interesting to watch. You see the excitement. So I don't blame you. You're looking at the VIX. Let's go back to that VIX. So there's the VIX, and the VIX, I think that's also live too. So it's down this morning a little bit at 2077 now. I think it was just 2076. So that's the action we're seeing in it. And again, I don't believe that the VIX. We did a webinar on this about a couple days in a row about the VIX is just not what it used to be. Before quantitative easing. There you go. Now it's traded 76 from 77. So, but I hear you. I myself, you can see we're in a daily sell here, and we are cleanly trying to be in a weekly sell. So be careful about being long the VIX. It could go the other way on you. All right, and then we were looking at yen. So let's go from yen. We go over to what is it? The Turkish lira, which jumped into a buy last night. I think I remember seeing that, thinking, "Oh, That's odd. A buy. So does that mean the money's slowing down coming into the currency? And let's put her up on the screen right there. So you can see that right there. It did close in a buy last night right there. Let's put that line in there. There we go. And you can see that strength, and you can see it's trying to lift up again today a little bit. And at the same time, the weekly is in a weekly sell right there. There's the zero line right there. And it's trying to lift up a little bit, but not a lot. Again, money's been coming in. That's where the earthquake was right here, that peak. So a lot of foreign aid is coming into the country, which means they need to take, whatever currency they're using and buying Turkish lira. All right, now from there, we go to the two currencies that relate to oil and gold. Right where we were before. Well, we looked at gold. So we can go from there to, let's do this. Let's go to Canadian, and that relates to oil. So there's a Canadian. It's in a buy from here. Why the line's not there, I don't know. There it is. And what defines that line is the fact that the histogram is plus and the green line, obviously they work together, are plus. And you can see here the weekly just gives you that comfort level knowing that there is definitely some buying going on up in there for the last 3 full weeks. So from the Canadian, we go like this. We go over to, let's do J4X. And we'll put up the West Texas Intermediate oil, right? Right. It's around here somewhere. There's Brent. I must be missing it. It's on here somewhere. And if I don't see it again, I'm going to go to Brent instead. Dollar. There it is. So you can see oil is trying to lift back up again. This is the daily. And we can throw it up on the screen here. Right there. Nope. I want that one. There you go. That's better. And we'll go away from the VIX. Oh, VIX is trading at 2081 now. Now it's perking its head up from the 76 area. So it's up 5 ticks. It must have heard me. It says, oh yeah. And I'm saying, oh yeah, that's what the math says. So brace yourself. And there it is. You can see oil is moving up. And we should be seeing here Canadian heading down. And it is. It's flat. That's what it really is. It's off its highs. Let's put it that way. But we're still in that daily buy. And we're in that weekly buy when it comes to the CAD. Which means that it's been losing, losing against the dollar. And when you go back and you look at oil, oil has been moving down. But the last 3 days here, it's turning up. So Canadian should be doing the same thing. This thing should be turning down. Take out these lows, if nothing else, right there. Let's see. Timothy says, cable just smacked me out. It smacked you out? Okay. Well, it's in a daily buy for a half hour now. So we're on, what is it? It's 8:05. Yeah, so we've been in a buy for a half hour here. I hear you. And as you see it rising, I have to assume that interest rates are dropping. And we saw the 5-year bond. Let's go back to the 5-year bond. That 5-year bond was pressing up, not down, compared to the 30-year. There it is right there. Yeah, as a matter of fact, it's heading for the highs of the day now. So it's well off its lows and it's almost unchanged. So that tells you what's going on there. The currencies will reflect it. Now let's take a look at gold. And there's the gold trading at 18.15. And let's put the South African Rand up on J4X, like so. There it is. You know, it's been rising and rising and rising and rising, and you know, it's adjusted now for the problems that occurred back in December. I think that's where it was there. Let's put it up over here. We have it a little bit more identifiable. There we are, like that. And there is the South African Rand right there. And so you can see here it's surpassed the political situation. In other words, it's, you know, they exploded the currency up because of the political problems they're having with the president. And now you can see it's climbing way past that point. And it's getting, you know, harder and harder and harder. Even with all this capitulation, you know, weekly buy, weekly sell, weekly buy, weekly sell, and then finally, you know, it straightens out. They get the rest of the sellers out of there, and then zoom. You know, now they're buying dollars and selling South African Rand. That's what it comes down to. All right, now from that we slide over to the Mexican peso. A view of America. That's what that is right there. Trading at like 3-year lows, which is a good thing because when the Mexican peso is doing well against the dollar, usually that means our economy is going to turn at the same time. And where else are we? Let's see. From there, and then we see, what else do we see? I guess that's about it when it comes to the currencies. If anybody wants to see any other currency, let us know, and we will, you know, chase after it. All right. Now from the currencies, we will slide to, let's see, let's do this. We will go to, which one do we have up there now? That's gold. So let's take a look at silver. And silver's doing that same thing. You know, pressing down now for, is this 5 days? Yeah, 5 days. It's been in that weekly sell all the way back to here in the plateau. So it's really having a problem, you know, getting going in here. You know, it's been, you know, we went into the sell here, and then at the same time we went into the weekly sell, and it's been in there ever since. It doesn't want to let go. And you can see it over here on J4X too, right there. That is the daily. You know, it's been pressing down, had a little blip right there like we had here. And then we're right back into the sell again. And we're down at the bottom end of the range, as you can see there. Anything else to be said about silver? The only, I guess, more than anything else is that, you know, the disappointment when you see real life, everyday situations where you put fuel in your machines, or you're buying food, or, you know, just purchasing things, you find the prices just moving up dramatically. And for the last 2 years, they've been doing that. And inflation has really exploded. And then what you get is you get this denial at the same time. You know, government not respecting it, not taking it serious. And you see the denial in the metals complex. Like, oh, gold? No reason to lift gold up. But how come then it's trading at $110 more next year? That's one way of doing it, isn't it? Yes, indeed, as I sip my tea. All right, from there, we go over to copper. Let's see what copper's up to. Put it up on J4X here. There's copper. Moving down the last couple days. Breaking the $4 area. And over here, that same gig right there. Look at that. Today it's trying to lift up though. They're trying to look at it. We're flirting now with the buy. This morning we weren't even doing that much. So that's pretty cool. We're seeing copper back over the $4 area. We're obviously, you can see the weekly right here. 3 weeks underneath, and we'll see if they turn that thing back up also. Let's see what it looks like over here on J4X on the weekly. Right there. Should have at least 2 red bars. Oh no, we have even more than that on a weekly. We have 4 going on 5. So they've been pressing it down for a while now here using the J4X. And you can see our fast is moving with the J4X. We're 1, 2, 3, 4, 5 also with our fast breaking down hard like that. So, copper, again, we always feel like, just as we look at the Mexican peso and think we're seeing some insight to the American economy, we look at copper as an insight to what's going on in the Chinese economy. Since they don't have a floating currency and their markets are not so free, we have to try to find anything that's able to float freely, or at least look like it's floating freely, and go from there. And so we can see that the copper market is definitely showing strength, even when it has been in the sell for weeks. All right. God, I love hot tea. All right. And then from there, we'll take a look at palladium. Right there. I guess we could start to think about the next contract in palladium. You can see this thing's been in a weekly sell since basically the end of January. And you can see the last 2 days it's trying to perk up. Gave some warning here, but boy, there it is. There's your buy, and it's not really going anywhere from it at the moment. But what's fascinating is the fact that the thing is down. What was it? I think it was showing you that it's down since mid-December, and that first weekly sell. It's only been in a weekly buy 1 week out of mid-December, and it's gone from 2,000 down to 1,400. It's like, wow. Talk about smacking. They really smacked the heck out of it. All right. From there, we slide over to, what was that? I guess we go to the energies. So we looked at the energies with the Canadian. And you can see here we're even reaching up more now in the buying for the last couple of days. This thing is trying to turn. Keyword there is trying. The back month, that's trading at 77.49, 48, 49. And the back month is trading at, whoa. Let me just go back, double check that. Look at that. The back month, the front month is 77.50, and it's 77.52. They're trading at parity now. They've been shrinking from 50, 60 cents down to the last couple of days to like 12, 15 cents. Let's put not West Texas up there. Let's put Brent up there. There's Brent trading in the 83s. You can see here this is the weekly, 2 weeks in its sell. Let's go with the daily right there. You can see a couple days up. Same situation like here. Trying to move up. They're buying. They're coming in. And so there's a push to get back into the long side of it, I guess. Interesting action we're seeing there. Oh, and let's see how the cable's doing for you. I think it expires in... Oh, no, it just started a new bar. That's what it is. Okay, so what are we now? Let's Let's take a look at that. We are now almost an hour. This is 45 minutes now, and a buy going on an hour. We'll see how this one does. Let's see. Go back to that. I'm leaving it up on the screen for you. And then, let's see. So that's that's that, right? Yeah. Let's go to. There it is, right there. And you can see the June contract there. And then let's go to natural gas. Natural gas has been holding up pretty well the last couple of days. We went into the buy back in here. You know, we've had this big circle here because the green line has jumped across the negative side of the manifold, heading towards the plus. And at the same time, this also has leaped up through the zero line and is in the plus since last week. So it's been telling us that they want to buy this since here. And sure enough, they are buying it. It is rising. And so that's natural gas. We're seeing a move up to the 280s from $1.90. What was it? $1.93, $1.92, $1.88, something like that. So we're seeing almost a full dollar move on the upside. What was the low here? The low there is that's 2 something. So it must have been a front month because we've switched. We're in May now. So we've gone 75 cents up. That's not too bad, is it? No, 50 some odd cents. So the low is 230 on this. And now we've made a high of 286 there. And today is 284. So that's 54 cents. A half a dollar move on the upside in just 4 days. Good action. Did you post that, Robin? On the Twitter? All right. From there, let's see. Where do we go from there? That's the energies. Oh, I know where we go. Let's see what Europe is doing with natural gas. So we go over to right there. This is an energy company down in Spain, and we see the stock. And the stock gives us insight to what's going on there, and you can see we fell down into the 25s about 5-6 days ago, and now we are back up into almost touched 27, and now we're hanging out and trying to push down again as we speak. We're at 26, the low 26s again, trying to get back to the natural gas. Remember last week I was telling you I was looking for natural gas ETF, and I was wondering if you had posted that as in other words, you can see on Friday, or was it Thursday? On Thursday we went into a daily buy, and the fast moving algo was also above the zero line last week. So was just wondering if you posted it. If not, doesn't matter. Just thought maybe it's something to think about. All right, from there, that pretty much finishes us off on the energies. We've seen what the metals are doing. So we'll go over and take a look at, that's all right, next time. We'll go over and look at the stock indices. So there's the S&P 500 right there. Climbed into a daily buy yesterday. It is flirting with the weekly sell at the same time. You know, there's the pressure is on. You can see our fast-moving algo right here had dipped down last week, and now let's see. Let's see. Oh, where is that? There we are. And so at the same time, what's up with that? Like that. There we go. So you can see that's dipped down last week. The pressure has been on this thing from there, and now we're climbing back on the buy side. Oh, cool. Okay. So, it seemed like I like this morning I was noticing. Let me just go over to the intraday here. Where's that at? Just go to the intraday. Right there. You know what I was noticing? Let me just do this. Just blow this up. It seemed like to me. Let me do the other one. it seemed like to me that they were. Well, you know what? Let me go back to the other. You can see the Asian hours. Here is the U.S. market close. And then you can see it was firm throughout the night. And then towards the end of the Asian hours, they sold it down. And that's the Swiss and the Frankfurt and the London Opens right there. So they started buying it in Europe after they sold it down. And I don't know, the stock indices, you know, they have buyers. There's no doubt about it. Matter of fact, someone was saying that the the Nasdaq 100 or the Tech 100 is still up 10% for the year, whereas the Dow Jones Industrial Average had closed down for the year last week. So, you know, we're still seeing some buying in the, I guess you could say, the dogs, in a sense. You know, the Tech 100 got crushed last year. Let's show you the Tech 100 right there. There's the Tech 100, and you can see. Let's move this down a little bit like that. You can see here we're not challenging this low. I think we did this yesterday, or we did it Friday. I think I showed you where you can see the Tech 100 is not challenging these lows. There's your October low coming into here. Is that the October low? There's the October low right there, and you can see, whereas the Dow Jones Industrial Average, the one with the biggest and bluest of all the stocks, you know, is underneath for the year at this point. I think it is. Yeah, like that closed on Friday, down for the year, whereas the Nasdaq is still 10% higher. Let's see. Timothy says, "Goodness, I should have taken profits early and switched to buys. Dukascopy data was indicating relatively equal lows, but now it has switched to a tick closing below 701 minute candle." Good. I'm glad you're using ticks. Ticks are better than minutes. And then you can see here, there's your situation. It's still holding up. It's been in a buy since here, right there. It's had a nice little move. It moved from 121, was that 03, up to 121.15, 14.5, something like that. So it's been a nice little move. Looks like it's taken out yesterday's highs too, you know, when you really think about it. So the pressure is definitely on the upside. Again, I think that we are coming, you know, there's a clock ticking, and that clock is that they're going to stop raising rates soon. That's what the clock is. That pressure is there. And so the fundamentals are trying to identify that fact. I think they are. Let's see. The closure below than the buys coming in would have been my trigger to close my sells. But the data at that time showed me relatively equal lows, left me thinking that was to be a sell side liquidity. Yeah, I hear you. Boyle has. There's one out there. It's like XQR or QX something. It was trading at $2.13 last week when I was talking to you about it. Remember? So, Dukascopy done messed me up. Okay, and what were you watching on the Dukascopy? Why don't you explain it again? Let me go and look. So you were saying the closure below, then the. Oh, sorry. Let me look up the next one. It says, "Goodness, I should have taken the profits early. Switched to buys. Dukascopy data for 710 was indicating a relatively equal lows, but now it has switched." Okay, so you're looking at a tick chart, right? Right. You're not looking at a minute chart. You're looking at a tick chart. Oh, or was that just a 1 minute? And it ticked at 1 minute, or in other words, so let me see what I can do about that. Let's go to Dukascopy. Let's go to the cable. Let's go to the 15-minute. There we go. Well, there's a buy there. Let's see, when is that? That is, okay, so let's do this. Okay, so yeah, I mean, let's do this. Let's go like that and go like this. So you can see here that 1:20:26 on a 15-minute using our math. But there these greens here. Let's see. So it's the same thing there, and it's been there. Let's do this. Expand this again, and go like that, so we can dissect it. So this pushes it in the buy here. There's your trade where you can get long right there. Okay. Then it goes up. Then we curve, right? So it gives us a sell. That tells you can be short. Then it pushes you right out of the short because the line is negative, but the candle is green. So it's warning you that the pressure could be on the upside. 2 candles later, it closes in a buy right here, and you get another buy opportunity. Okay, you've given up a little bit of all this nice profit. Nothing major, very small. It's a winner chicken dinner on out of the 3 trades. Then you come to here, you go into a sell again right there. You got a red, and it pushes you out of it again because now you're green again. All right, then we go into a sell again because it's still there, but you could not get long because the green line is underneath the dashed line. So you're flat for here, you go short there, and then it warns you here again. It's the green line is through the 0 line, and at the same time, it's a green candle, so it's telling you to be long for like the last hour. So it's matching up to a lot of our work here. You'll be able to go back and look at that on a video. All right, now let's see. We've got a minute and a half to the news, and we can watch the action in that news, and then from there we'll call it a day. There we are. See, mess me up. Yes. Okay. All right, that's good there. And Robin says yes. All right. I did see the yes back further. I just wanted to figure out what I wanted to show Timothy how to try to use those minute charts on Dukascopy. It can work better if you use our indicator, our Manhattan combination, which I will talk to Janos about. Let's see, definition of trends, inflation, hot. Uncertainty of markets with Fed news. Wow, getting lots of thumbs up. Let me just respond to that. There we are. That's from internal Dukascopy. All right, so what do we got here? We got, there's news. Here's the stock indice, and we are 15 seconds away from that action. There we are. And there it is. Was there any action to it? I thought there was some economic news coming out. Maybe it's later on today. Because I'm not seeing any real action at all. Stock indices sitting dead there, and it's been 17 seconds now. So not like some of those days. All right, that means we're out of here. Let's see. Timothy says, my internal lagged. I was watching the 1 minute chart from between 7:01 to 7:10. Ah, okay. Okay. I hear you. Well, we're going to get out of here, and the 1 minute, let me just take a look at the 1 minute from 7:10 to 7. That's not it. Let's go like this. And then we go like this. Open. Let's take a look at the 1 minute right there. And there is the 1 minute, like so. So 7:10. Oh, it was in the minus, and then it started to turn back up in here. And then strength again, 7:10. I see, like that right there, but then we started to get strength. Now let's see what Dukascopy was reflecting in a 1 minute. There's the 1 minute. Let me just do this. Like that. And go like that. Go like this. 7:10. So 15:30. So 14:30. So there it is, right there. So there's the 1 minute. It was pressing down from here, then jumped into the buy right there, and then it's a lot more fleeting action, that's for sure. And then like there's your sell. It doesn't really give you anything out of it. There's your buy. It's a very nice little win. That sell was a good one there. That buy was okay, and then this is a great buy. And then here's your sell there. I don't know, it seems pretty accurate. Seems to be moving all right. Again, I'm not a fan of minute charts. All right, let's see. So Robin says 8:30 U.S. international trade goods. Yeah, it didn't seem to move the stocks at all, did it? Let me just. Yeah, I didn't see any real action out of the stocks out of it. Let's just see what they're doing right there. Yeah, stocks are flat. They're actually down a little bit from it, I see. 120. Okay, I see what you're saying. Let's see. AM retail investors. Yeah, I guess it had no effect. I'm not even hearing them talk about it, so I guess it's not that important. All right, traders, we're out of here. This is Doc from North America saying catch you on Happy Hump Day Wednesday. The week is moving along. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Let's do this. Let's turn off.